Hey everyone, welcome back. Today I'm breaking down Uber's latest quarterly earnings, which was reported on February 5th. If you are short on time, here are some quick highlights on the earnings. The gross bookings grew 18% year over year. The income from operations was $770 million. The operating cash flow was $1.8 billion and the free cash flow was $1.7 billion. And don't forget, Uber is trading 51% below its fair value, and that is the whole thesis why Uber is part of my top 5 2025 stocks. Now, if you have not seen the video on what the other 4 stocks are, I'll put the link right here. Definitely check it out. I have also covered 3 other stocks from that list. All the links will be in the description. And if you enjoyed today's video, make sure to give us a like, share it with your friends and family. And without further ado, let's dive in. Uber stock is up 23.67% year to date. I covered Uber on December 12th. That's the video is right here. You can check it out. And at that point of time, Uber was trading around $59-$60 mark. And because of such a big gap between the fair value price of the stock and the financial conditions of Uber improving, that presents an asymmetrical bet option. And by the way, that asymmetrical bet option still exists today, even though we had a 23% run up. So they reported earnings on 2/5. They beat their EPS by $3.04. They also beat their EPS gap by 2.73. They beat their revenue by $185 million. They will report another earnings on 4/29, and the expected EPS is about 69 cents, which I believe is going to get revised. And the revenue estimate will comes out to be 11.59 billion, and I expect that to be a beat as well in the coming quarter. Just look at the earnings history. They have had a beat on the revenue from the last 5 quarters, and from last 3 quarters they have beat on the EPS. And the primary reason for these beats are right here. The gross bookings grew 18% year over year to $44.2 billion. The revenue grew 20% year over year to $12 billion. The income from operation came out to be about $118 million. And the most important was the adjusted EBITDA grew 44% to $1.8 billion. These are some great numbers from Uber, even though when they reported earnings, a lot of bears on FinTwit and YouTubers were trashing the Uber stock. And one of the main reasons for their trashing was that the launch of autonomous vehicle or robotaxi by Tesla is going to completely destroy the company. We will touch that in the risk section. Outlook for Q1 2025, they expect the gross bookings to grow another between 17 to 21%. So let's say even another 18% increase is still amazing that the company is growing at 18%. Their adjusted EBITDA growth can be anywhere between 30 to 37% year over year. These are some massive numbers the company is putting together. They grew the monthly active platform consumers 14%, trips went up 18%, revenue 20%, income from operation 81%, adjusted EBITDA 44%, and look at the cash flow 122%. If we see another 50 to 80% free cash flow increase, this is going to completely make the stock go ballistic in the coming quarters. Uber has 3 main business segments. You have mobility, delivery, and freight. Both the mobility and delivery are growing substantially. The freight was pretty flattened out. There wasn't much expected. So overall, for 2025, we are expecting a revenue growth of 14.72%. I believe that should go up to about 15 to 18%. We will see a similar growth rate for next year, 2026, similar growth rate for 2027, and then it drops to 11.5%. So for the next 4 years, you're growing between anywhere to 11 to 16-17% in the revenue side. And I think that presents a very good opportunity for you to invest in a company that has a lot of upside potential and it is trading well below its fair value. Also, don't forget, the balance sheet looks amazing. From a short-term asset, they are covered nicely. They will have surplus, and even from a long-term assets, they have a lot of long-term assets compared to the liabilities. So they are pretty solid from that perspective. We always talk about the fair value. The stock is trading at $74.60. The fair value is $154, which means that stock is still trading 51% below its fair value. And that is where the asymmetrical bet comes into the picture. So the Seeking Alpha analyst, the Wall Street analyst, and the quant rating all have a buy or a strong buy. The average stock price target to be about $88. The high could go up to $115 and the low would be $68, which is pretty close to where we are right now. Whenever you are investing in a stock, there is always risks associated with it. If you are too worried about investing in a single stock, I would highly recommend investing in ETFs and index funds. They provide you a lot more coverage and diversity and will hedge you from a single stock decline. The first risk is presented by Uber's peers, and it is more the revenue growth forward revenue growth for Uber is about 15.7%, whereas if you're investing in Grab, you will get about 33% growth, and Lyft, which is a US competitor of Uber, you will get about 17%. So from a revenue growth standpoint, Lyft presents a better opportunity. The same can be said from the gross profit margin. Uber gives you a gross profit margin of 33%, similar to Lyft, but Grab gives you a much better gross profit margin with 41.62%. But the second and most important risk that is to Uber's business is coming from the autonomous vehicle segment. As Waymo expands in different markets, as Tesla launches its robotaxi, these are presenting to be big risks to Uber. Before I share my opinions on why I do not think that this particular risk is in the short to mid-term for Uber or really going to materialize in the near term, watch what the CEO of Uber said right about this topic when he was interviewed post-earnings.
Do you think, before I turn over to my colleagues, that there's still a belief, even though Waymo's doing 150,000 a week, which I'm still thinking is not all that big, that there is an existential threat from autonomous vehicles away from you, and that could be some sort of overhang where people are saying, I'm scared?
Well, I think autonomous introduces both uncertainty and a huge opportunity for us. If we look at the U.S. market, for example, we think autonomous alone in the U.S. can be $1 trillion market. And the tech is definitely getting there, but the commercialization is going to be much more challenging, right? To be able to deliver autonomous at scale, for perspective, we're doing 33 million trips a day, right? Those are the kinds of scale that we operate at. And a bunch of stuff has to come together. First, the regulatory environment has to get there, right? And it's national regulation, state regulation, city regulation. It's going to take some time because regulators need to get comfortable with this new technology that's operating in the streets. Cost of a mistake is really high. Second, what you need is a superhuman safety record. Like the opportunity that you have with these robot drivers isn't just to be better than humans. They could be multiples times better than humans. And I think the industry should take that opportunity and increase the bar on safety appropriately as a result of this incredible opportunity. Third, you need to mass produce these cars affordably, right? It's not about 100 cars or 1,000 cars. You need hundreds of thousands of cars. That is going to take a while, and OEM industry is definitely taking notice. They're investing. But, these vehicle platforms takes years to develop. Then, once you have the vehicles, you need to operate them on the ground. Fleet operations, it's a ground kind of game. We're very familiar with that. We already have fleets all over the world. And then you need really high utilization because the cars are expensive. You need to operate them at high utilization, both during peak times and during troughs as well. Right. The only way you bring all that together, this commercialization, is with Uber and the AV industry. It's going to take a while. As that time passes, you're going to see a lot of autonomous players coming in with these big transformer models, with the DeepSeek moment that we saw. The development of this technology is going to be cheaper and cheaper and cheaper. But we think that with the safety promise and with a partnership like ours, we can build autonomous to be a very, very big business.
You obviously thought a lot about it.
As you heard from the CEO, autonomous vehicles are real. It is a legitimate threat to the business model, but it is also an opportunity for Uber. First, I don't believe that Tesla is going to launch the robotaxi in Austin of June of 2025, and it is going to scale up to service all the cities in the United States in the next 1 year to 3 years. That is just not going to happen. Number two, you need zero accidents and you need the safety to be at top notch, because one accident from an autonomous vehicle is going to push the program back. So those are some risks to those companies who are running autonomous vehicle. And lastly, one thing that he did not cover was the mindset. It is going to take a lot of time for the mindset of individuals to change. Today, when you order a taxi, you have a human being driving you from point A to point B. It will take some time for users to get used to not having anybody in the car. The transition time actually takes much longer than what Wall Street estimates, what a lot of bulls are estimating. I am not a Tesla fanboy, and I do believe Tesla is part of my top 5 stocks for 2025. The upside potential is pretty high for Tesla. That does not mean that there is no potential for Uber. I still believe that Uber is going to be the core software that is going to help Tesla, is going to help Waymo, and multiple other companies that are going to be in the AV space. This is the daily chart of Uber. When they reported earnings on Wednesday, stock dipped 7 to 8%, but right next day, stock coming back, and then we ended the week pretty strongly with this bar over here. In October, after the earnings was reported, we saw this gap down, and since then the stock has been trending downwards and creating lower highs and lower lows. This trend has definitely reversed after consolidating in this area. We are seeing a reversal where we have started to make higher highs. Short term that I see is that we should be able to see this gap fill happening. In the short term, I do believe that this 78.55 is going to act as a resistance for Uber. Problem that I'm seeing with Uber to continue this trend forward is there are much more broader implications from the market standpoint. First of all the volatility because of the job numbers that came out pretty weak. We have no rate cuts on the cards as of right now. based on what is expected. Now, Jerome Powell is going to go for a testimony in the coming week, so we'll see how that plays out. Market is going to be very volatile. The CPI numbers are going to come out, so we will get to know from an inflation standpoint. The GDP numbers came out little weak as well. We are back into the world of tariffs with all this geopolitical environment. So in the short term, I expect this resistance to continue. So if you are looking to trade Uber, you still have a good potential of at least 5% from here onwards before we hit the resistance level. If we are able to break that resistance, we want to make sure that we have a confirmation in the coming days and weeks to see that that resistance becomes a support before Uber stock can move forward. However, the goal of this trade is the asymmetrical bet that Uber presents, and I keep reiterating the fact that the fair value, we have a lot of potential for Uber to go and close the gap to the fair value, and that's almost 105%. I am not adding more to my Uber position because I have already completed my buyouts for all the tranches for this trade. Now keep in mind, this is not a day trade. This is not a swing trade. This is a position trade, which means I'm getting into a position, playing to the upside to my price target, and then getting out. So this may take much longer than your usual swing trades. I initiated a position on December 13th. So after I made the video on December 12th, I initiated a position. I'm up 15%. My next tranche, I'm up 12%. Third tranche, I'm up 8%. For my fourth tranche, I'm up 12%. And February 4th was my fifth tranche. And this is the end of my investment in Uber as of right now. As you can see on this channel, when I present a stock, I'm actually investing on those stocks, and these are my different tranches that I have built. So I will keep you updated on my Uber purchases as we go along. I may run covered calls on some of these positions to make sure that I am able to take advantage in case I see a decline in the stock price. Now, if you do not have a position in Uber and you want to build a position in Uber, take advantage of the cash secured put. If we see a rejection from 78, I would look to add stocks around the 72 level. Or if we see further decline, a good point to add Uber would be anywhere between $65 going up to $68 or $69. That would be my price target. You can even look at opening CSPs maybe 30 days out at $69 or $70, or if you want to go a little bit above, I joined like 30 delta, so 29 delta would be $71. You will get $1.48 at least. So that will drop your cost basis to 69.5. So you can open this cash secured put expiring March 14th, or you can go March 21 and open a $70 put at 142, which is 26 delta. That will help you to build out this position in the long term while also hedging your risk from the downside. Thanks for watching. That was my analysis for Uber's financial statement, the price targets, the technical analysis. I also showed you my position. Are you investing in Uber, or what do you think about the different risks that we talk about from an Uber investment? Let me know in the comments. And if you enjoyed today's video, make sure you like, subscribe, and ring that bell notification. I will see you next time, investor family. Happy investing.